Well, to be honest with you, this morning I feel like I'm missing something. I mean, I've scoured the news. I've looked all through X. I've looked in all the places where I always go, and usually I think I get 100% of what's going on out there. Maybe there's just maybe a piece of news, or maybe there's just a sentiment that I'm not picking up on. We all the numbers that have come out today have been as good or better than expected, including the PCE index. I can't figure it out, except maybe the spending. I don't know. The spending was very good. The income numbers were very good. Income is outpacing inflation. That's good. I just don't know what's going on because right now we've got the 10-year bond yields going up by over a basis point. And we've got Tesla, which was up early, is now coming back down almost to the break-even level. I don't really get it right now. So maybe you'll let me know in the comments below what you think. Why do you think the market is responding to the news today in the way that it is? Nope, I don't get it. All right, so, but there was lots of good news. Wedbush securities analyst Dan Ives, you know that guy. Friday, he raised his price target to 600 up from 500. And that would put a 42% bump compared to the price on Thursday's stock market close. The 600 price target is also 23% higher than Tesla stock all-time high of 488, which was the intraday. The 480 was the end of the day. We believe Tesla, he says, we believe Tesla is taking major steps in advance of the AI revolution path with autonomous and robotics front and center heading into 2026 that will be a game changer and define Tesla's future. Ives added that CEO Elon Musk is driving Tesla into the next stage of growth. He expects the Tesla's robotaxi to be rolled out aggressively to over 30 cities within the next year. We estimate that AI and autonomous opportunity is worth $1 trillion, which he has said before. Ives estimates that Tesla will own around 70% of the global autonomous vehicle market over the next 10 years, and that Tesla's full self-driving or FSD feature could see an increase of penetration of more than 50%. So we could be, instead of around 15, 14% that we have now, people would be picking up the FSD at the 50% rate, which would be huge, obviously. The bullish note from Ives comes as Tesla price target has received 10 price target increases so far in September, according to FactSet, among overwhelming optimism for the stock. With analysts seeing Tesla stock hitting new record highs, investors await Tesla's third quarter global vehicle deliveries next week. The prevailing sentiment is it will be a strong quarter with U.S. consumers decided to take advantage of the $7,500 tax credit. Officially, analyst consensus has the global shipment numbers at 448,000, which is up 3,000 from the last time I saw it. That's FactSet. This would be 17% above second quarter total, but still down 3% versus last year. Few analysts have updated their quarter three delivery targets since late July, however. So there we can see those updates coming today, Monday, Tuesday, Wednesday. More recent estimates are getting closer to 500,000, according to this article. Wedbush said Friday that Tesla deliveries could be getting back to around 500,000 units in quarter three. U.S. EV deliveries are expected to plunge after the tax credit expires on September 30th. Not according to me. I don't think they're going to plunge. I think we're going to, maybe it'll be hard to get through the entire quarter with the same numbers, but that's kind of what I'm estimating with the Model YL going great in China. And with this, I'm thinking probably the Model Q coming out right away in October. We'll see. Tesla updated its website over the weekend, showing that customers can still take advantage of the tax credit, and etc. Deutsche Bank analyst Edison Yu on Friday raised the firm's price target on Tesla to 435 from 345, expecting 461,000 deliveries for quarter three, roughly flat year over year. All right, so far, 100% good news, except for this foolish notion that numbers will just drop off the end of the earth in quarter four. Supercar Blondie. I've never heard of Supercar Blondie, but Her article that she wrote got picked up multiple places. Now, a few months on from the launch of the YU7, Xiaomi, I think that's how you pronounce it, Xiaomi CEO Lei Jun has shared his honest thoughts about the Model Y. Speaking during his annual speech, Yun revealed that Xiaomi had bought 3 Tesla Model Ys to disassemble them and carry out research into the EV. And what he saw left him thoroughly impressed. We bought 3 Model Ys for disassembly and research inside Xiaomi. What a great vehicle, he said. Not only that, but the CEO even went so far as to say that if would-be EV owners don't like the Xiaomi YU7, they should consider getting themselves a Tesla Model Y instead. I mean, how much better does it get than that? Jun had previously heaped praise on the Model Y, admitting that there was a lot to learn from the EV and branding it a leader in many aspects. He also publicly congratulated Tesla on the autonomous taxis, responding to a Weibo post from Tesla Vice President Grace Tao about its driverless vehicles hitting Austin. Jun said, Tesla is indeed amazing, leading the industry trends in many areas, especially FSD. We still have to continue learning. That seems like good news. Wouldn't you think that that would be good news? Wouldn't you think the stock would be up today on that? Wait, there's just way more good news coming. This is Randy Kirk, by the way. You know what to do. Barron's has this: inflation picked up in line with economists' expectations in August, leaving an opening for a possible interest rate cut in October by the Federal Reserve. The core personal consumption expenditures price index, which excludes food and energy and is the Fed's preferred inflation gauge, rose 0.2% from the prior month and 2.9% year over year. Now, 0.2% would be 2.4 on an annualized basis, right? And we know that Chairman Powell has said that 0.4% of that is tariffs. So we're at 2%. That should be really, really good news. Now, you've got the annualized rate at 2.9. So year over year, I mean, not the annualized rate, but rather the year over year rate at 2.9, which is where it was last month and what was expected. And so that seems like good news. In July, core PCE rose by 0.3%. So that would be a better, so 0.2 is better than 0.3. And that's the core number which Chairman Powell pays the most attention to. So it seemed to me that core PCE is in line with their 2% goal. Is that what? Tell me in the comments below what I'm getting wrong here. Now, headline PCE, which includes all categories, including energy and food, which is volatile, that rose 0.3% of the month and 2.7 from a year earlier. So it went up 0.3, which would be a 3.6 rate annually, which would be, that'd be rough. But if you take the year over year on that one, it was at 2.7 from a year earlier. Both of those were as forecast. And the 2.7 number, again, if you take away 0.4, if you take away 0.4 from the 2.9, you're at 2.5. If you take away from 2.7, you're at 2.3. And Powell might be wrong about the 0.4. It might be a little bit more, it might be a little bit less, but it's still very, very close to the 2.0. This seems to be very, very good news. You would think the bonds would be falling, not going up. Even though headlines PCE pace picked up in August compared to July, the increase was broadly expected. Good news was the core was lower than expected. Personal income increased $95 billion at a 0.4% monthly rate. That's 5% per year. And that's way more than inflation, according to estimates released by the U.S. Bureau of Economic Analysis. Disposable personal income also was up 0.4%, and personal consumption expenditures increased by 0.6%. So that is 7% per year. Now, that's the only number that I can find that seems like it would be worrying. We've got people spending money faster than they're making money, but then that's kind of the American way, right? But anyway, that would be one number that I'd be a little concerned about. Why are people spending that much money? Personal outlays, the sum of PCE,
personal interest payments and personal current transfer payments was up was up 0.4, it was up 4.6% year over year. The savings rate was 4.6% year over year. I'm very sorry, I blew that. 4.6% was the savings rate. That's good, not great, but good. All right, so that again, I can find one little thing there for the bond market to get nervous about, but other than that, I couldn't find it. Market Watch said this: personal spending rose 0.6% last month for the third month in a row. Spending this year is actually almost as strong as it was last year. What's helped are rising incomes. Worker pay is increasing faster than inflation. Personal incomes increased 0.4%, as I just said. Consumer spending, the main engine of U.S. economic growth, turned out to be a lot stronger in the spring than originally reported, even as the Trump administration launched the fiercest trade wars in decades. They weren't trade wars. They were trade rebalancing. It's inappropriate to call them trade wars unless you have an agenda. The latest evidence suggests households are still spending at levels consistent with a stable economy. Consumer spending could even pick up in the next year as new tax breaks. Listen to this now. Consumer spending could pick up in the next year as new tax breaks kick in and the Federal Reserve keeps cutting interest rates. Okay, then we got the University of Michigan Consumer Sentiment Index. Now, keep in mind, this is 500 people, 500 total, maybe 600 tops. It's not even 1,000. Rasmussen, to do their presidential numbers, they do 200 people a day, 1,000 every 5 days on a rolling basis. They're always another 200, another 200. This survey, which gets so much credibility, does 500 a month. And then they break it down into all these categories. Consumer sentiment confirmed its early month reading and eased by about 5% from last month, but remains above the low readings seen in April and May. Although September's decline was relatively modest, it's still across the board swath of the population across groups by age, income, education, and all 5 index components. A key exception, sentiment for consumers with larger stock holdings, like you and I, held steady for September, while those with smaller or no holdings, sentiment decreased. Still talking about this divided economy. I will buy that part of their report here. If you make over $100,000 a year, you probably also have stock holdings. If you make under $100,000 a year, you probably don't have much. And so there you go. This month, sentiment moved down about 9% for independents, down about 4% for Republicans. It lifted for Democrats. Wow. Nationally, not only did macro, although I think the problem was the Republicans' numbers were way up here, because you can remember that if you listen every month, you know the Republicans were way up here and the Democrats were way down here. So it might just be kind of a moderation. Personal expectations did well with softening outlook for people's incomes and personal finances. Consumers continue to express a frustration over high prices, with 44% spontaneously mentioning high prices are eroding their personal finances, the highest reading in a year, even as inflation comes down, as the PCE is showing, as Truflation is showing. But see, it takes time for people to get that, and I still think it's a perception problem. Remember, this is a survey. Interviews this month highlight the fact that consumers feel pressure both from the prospect of higher inflation as well as the risk of weaker labor markets. Year-ahead inflation expectations receded slightly to 4.7% from 4.8% last month. So inflation expectations down. Long-run inflation expectations moved up to 3.7 in September, but stand much lower than the 4.4 spike seen in April. So what does Truflation say about inflation right now? They have it at 2.04 overnight, 1.81 year over year, and 2.45 on the PCE equivalent, which would be better than what the PCE just came out, but not that much different, and would tell me that we're in great shape, but the bond market doesn't seem to think so. The President of the United States, after his UN speech, popped to 57%, and the overnights still sitting at 49% on the 5-day moving average. What a day. Incredible. I mean, all that good news So what do we have the 10-year at? Well, the 10-year is improving. Here we go. We have now back to unchanged. Earlier, the 10-year was going up 1.1. Now it's unchanged. This is so weird. What a weird day. The PCE information comes out good. The longs go up, but now the knee-jerk reaction was to go up. I don't know why. Now they're coming down. So the rates are coming down on all of the other longs except for the 10 right now. The 20 is down, the 30 is down, but the 10 for some reason right now is unchanged. But that is better than it was. We're at 4.174, which is ridiculous. It should be in the threes. We'll see what happens. Most of the shorts are also down, except for the 1 month and the 2 month. I don't know why those are up. All right, let's go ahead and look at the stock market real quick. We have got Tesla now actually negative slightly, down 0.04. That's pretty close to unchanged, but it was way up. It was up around $430 a share earlier this morning. Now we're at 423. That 423 is a break number. That is one of those numbers. We have a lot of them now. 410, 423, 430, 440, 444, and 400. So all of those now are kind of, I would call them lightweight places where the stock has trouble breaking through. 410, I would call the strongest. It's been tested many, many times. 440 on the way up is very, very strong. It's been tested many, many times. So right now, slightly down on Tesla. We'll double check that before we quit. We've got the NASDAQ down a little bit, 0.31. We've got the Dow Jones up a tad, up 0.33. You have got the S&P, I'm sorry, now we're talking about the Mag 7 is mixed. NVIDIA down over a percent, Meta down over 1%, Apple down almost 1%, and the rest are up. We have got the Cathie Woods completely mixed as well. Mostly down, I would say, a slight more down than up. That is absolutely true right now. Okay, now let's go. We already looked at the bonds. By the way, yeah, still unchanged. Okay, whoops. Things are a little messed up right now. Okay, here we go. Oops. Now we've got, no, that's messed up. So yeah, I'm gonna have to reset my CNBC thing here. Okay, oil is up a full buck. Now maybe that's what's bothering people. $66 for oil right now. That is Russia cutting fuel exports. There you go, cutting exports. That's interesting. They're on purpose cutting exports, or they're cutting exports because there's nobody buying. We've got natural gas down 2.65, all the way down to $2.83. That's pretty low based on current numbers. We've got gold up 37.60, back over to 38.08. I don't know if that's an all-time high. It's probably very close to an all-time high. Silver up 1.85 this morning at 45.95. I don't think that's an all-time high, but it's getting close. Copper down a little bit, 0.7. That's been maybe that copper mine has been giving some updates. I don't know. I haven't looked at that. All right, dollar is mixed. Bitcoin down 550. Ether up 0.19%. So these two have been going like opposite many days. And there you go. Those are the numbers. Later today, I'm expecting a sort of normal day. Got Larry Goldberg, probably early, around 3-ish, 3:15, something like that, maybe 3:30. And then later on, it will be either. I've already got them. I've already got these videos done. It's just a matter of choosing which one to show you. We have another CERN Basher. We have another Brian Wong, and then I'll be talking to Phil Beisel here in just a little bit. And it might be that we throw in the Phil Beisel tonight. So it'll depend on which one I think is the more prescient, important for today. Okay. All right. So that's what's happening later today. Last night, it was CERN Basher. Of course, you should go back and look at CERN Basher because it's always fabulous. And it was super. But the one I've got in the can now, it's mind-numbingly good. So we'll see when I'm going to show that to you. All right. So just for fun, going back, one last look at Tesla. It is still down about the same. We're sitting at 423.11 cents. And that will be it for today, for this morning, rather. It has been great, as always, talking to you.